And then lastly, we'll talk about this, and then we're going to go into any open questions, and then we'll do a break before we go over midterm. Let's see. Analyze expense and using activity-based budgeting. Okay, so activity-based budgeting, how is it different than what we just did with a master budget? Traditional budget, we went by salaries, supplies, depreciation, utilities. We went by these buckets of costs. We bucketed by salaries. And salaries could have been a lot more detailed. For an audit firm, we might do auditing, financial reporting, tax reporting, and cost accounting. So for a CPA firm, you might do all of this work, all this different work. And I've done all this kind of work in a CPA firm. And so it might be more useful from a budget perspective to have it broken in by activity, right? Because then we figure out, okay, and this is how a lot of big companies do it, is how much money does our auditing department need? How much money does our tax department need so that they can plan and then they can make their own budgets? And this way it helps us see how much money that we're making as well. So just an understanding of the resource required to perform activities and costs associated with those resources. This is a way that we can measure changes in activity levels and accommodate those changing. So if we have more audits this year than tax, we know the expected kind of mix. So just know what it is, know that it exists. And it's different from traditional budgeting because we're no longer just tracking these traditional buckets, like financial statement buckets, but we can do it by activity as well. And what if we were to do all this for a merchandising company? Merchandising company is a lot easier than our manufacturing because we're not building, we're just buying. So our merchandising, we just purchase. We just have a purchasing budget. We don't have to worry about direct materials, direct labor, manufacturing budgets, or any of that. So everything else is the same, but we're going to remove all these operational budgets we had in here. And so for merchandising budget, instead of building the hockey sticks, we're just making, we're going to buy them for $60 each and maintain an inventory of 90% of the next month's budgeted sales. We know how much hockey sticks we had on hand at the end, and the general layout for the purchases for the budget will be as follows. So again, it's always really simple. We have an addition, we have some subtraction. We add whatever was in the previous ending, and we subtract whatever was in our beginning, and we get our budgeted sales for the period. So merchandise for the inventory to be purchased is equal to the budgeted ending merchandise inventory plus budgeted sales minus the budgeted beginning. So do you think about it? Let's make it more practical. I'm going to sell 100 jars of peanut butter. I plan to sell 100 jars of peanut butter, but I want to end with at least 20 jars of peanut butter. So that's 120, but I started with 40 jars of peanut butter. I need to buy 80 jars of peanut butter, right? And that's the idea. What do I want to end with? So I have some safety stock. What do I have in my beginning inventory? And what do I want to sell? And so this looks very similar, right, to our production budget. And it is very similar. We just don't have to worry about all the direct materials, direct labor components. We just flow through the information just as we would in the production budget, but just as a purchasing budget now. And then this is our cost per purchase. So I would say if you want to think about merchandising, just think of it very similar to the manufacturing, except simplified. You don't have, instead of the production budget, you have a purchasing budget, and you just purchase those items and you're done. So that's it. That's budgeting. A master budget. We went over it pretty quickly, right? Want to just go over our learning objectives just to see that we did cover everything. We described the benefits of budgeting as well as the cons. We analyze expense planning using activity-based budgeting. And then we discussed the master budget, the cash budget, budgeted financial statements, and each component of the master budget for a merchandising company and a manufacturing company. So I'll stop there. If we have any questions, I'll open it up open up the forum, and then we'll take a break.